You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And this is probably as close to breaking news as you're likely to get from us here at the Big Cast. We've got an interview today with Tom Kane and Ashley Sharp from the Illinois Credit Union League. Been hoping to catch up with them for some time now about the, I don't know what you want to call it, debacle, kerfuffle, choose your word, around the Illinois Interchange legislation that passed as part of Illinois' budget process earlier this summer, or I guess maybe late spring. And as it turns out, we happened to be speaking just as there was a major development last week in the space. So we're going to be getting to that very shortly. I think it's a major topic that we all should be spending a bit more time thinking about, because it's not going to be isolated to Illinois for the most part. I want to remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. Also, we'll point you to the site for our CU Town Hall, cutownhall.com. The next time we're going to be getting together will be Wednesday, August 28th at 3 p.m. Eastern, noon Pacific. That is a live, interactive Zoom session where we convene credit union leaders, and it's been increasing in size on a regular basis and having some great interactive conversations about the issues that are really top of mind for credit unions these days. A lot around fraud, a lot about ransomware recently. I would not at all be surprised if this interchange stuff comes up as well. So do check out. It is free to join, but you do need to register in advance, and it's obvious how to do that if you go out and visit cutownhall.com. You'll also find replays of the past episodes, but trust me, it's a lot more fun if you get a chance to join us live and participate directly. As usual, first a little quick rundown of some of the news over the course of the last week. I had a chance to attend here in Atlanta a conference called MPC 24, Mobile Payments Conference, I guess is literally what that stands for, although it's obviously, but it's grown to take on a broader span of topics than just that. Really strong conference, especially a few sessions that really caught my attention. Congratulations, kudos to Marla Ellerman, who puts this one on. My favorite session had to do with banking as a service. And I was shocked, shocked that the chief risk officer of Evolve, I saw on the agenda that he was going to be coming and speaking. And my thought literally up until the day of the event was, yeah, sure, somebody from communications is going to tell them that is just not going to fly. That there's so much, as you're probably aware, with the situation over there with Synapse and Evolve, that they've had their share of issues around banking as a service. And I didn't think they were going to get on stage. But lo and behold, the chief risk officer, Peter Monachheim, who I used to work with back in our days at CheckFree, joined and was remarkably candid about things that were going on in a very constructive and professional way. One of the things he pointed out is that banks simply cannot rely on fintech companies' representations is really what it comes down to. They have to actually prove things out themselves that they're working properly. I'm just thumbing through my notes as I'm speaking because I want to make sure I get some of his key points here. But one of the keys is, this takes systems. This is not something that scales easily, and they're still doing a catch-up on that. His point is that he thinks that there's a lot of bad press around banking as a service right now, but he still thinks that there is a huge opportunity to do it right. That is a quote that I wrote down from him. But in general, again, not being able to rely just purely on the representations of banks. And that makes it challenging to figure out how to make that a business model. And they're in the process, as I said, of retooling some of their systems to make that possible. Also on the panel that he spoke on was a gentleman from Max Credit Union down in Montgomery, Alabama, by the name of Drew Sullivan. He has a background also that includes time at SoFi and Western Union, and he's helping Max Credit Union just start out on a journey around banking as a service. They're still in the process of evaluating systems. He points out that as a credit union and a member-driven organization and a not-for-profit, they have a different approach to it than a lot of the banks that have jumped into this space. And he points it out that they're really only looking for providers that are actively helping their members and providing services that their members are looking for, very different way of going about it. I was surprised again to see a credit union on stage here talking about that, especially with all the noise that banking as a service has gotten. Jokingly, in the middle of the session, I thought, this feels like backpedaling as a service because people are to some extent getting out of the space. But it really is one of those pendulum swing kind of things. There's still some there. And I hope to follow up with Drew in the near future. I'd like to find out more about exactly what the journey looks like over at Max Credit Union. My understanding is that these sessions, that especially this one and maybe some of the others, will be available eventually on the MPC YouTube channel. I would strongly recommend you check those out. And when they are posted, we will be sure to provide a link here in our show notes here on the Bigcast. Another story that popped up just this morning as I'm recording this on Monday morning, that the Wall Street Journal front page has a really interesting story about Sam Altman, you know the name from OpenAI, his WorldCoin venture that is a digital currency, but also looking to create an identity standard across all population, across the globe for individuals. They've undertaken the initiative of looking to collect retinal scans. They've already done this with 6 million people. Two of the biggest markets they've managed to make some headway in are Kenya and Hong Kong. The idea and the vision that Sam Altman has is to have an immutable ID, again, one that's impenetrable, and given what he knows is going on at his own shop at OpenAI, doing everything he can to help distinguish human activity from machine-driven activity online. And apparently the retinal scan's good for that. On the other hand, there's been a lot of pushback. It is still illegal in the US. Both Hong Kong and Kenya and a couple of other countries have put up roadblocks and said, hey, you better slow down. We're not sure what you're doing with this data. We're not sure how well protected this data is, etc. He is actually offering to the individuals for providing their retinal scans a little bit of the WorldCoin currency. So he's paying you for that information. Exactly what happens with it from there, there's some representations that you don't have to give permission for the data to be used elsewhere. There are allegations that the people who were contacting folks strongly encourage them to sign away those rights. It comes down to that phrase that we've used many times here. If you can't figure out who's paying for the product, you might want to look around in the mirror. So interesting stuff. I don't have a strong opinion on this one at this stage of the game, but it is really an interesting twist that I'm sure is going to be an ongoing conversation topic. We'll post a link to that one in the show notes as well. Now, as I said, our main attraction are the interview with the Illinois Credit Union League's president and senior vice president of advocacy, Tom Kane and Ashley Sharp, respectively. Just hours after we had this conversation, a lawsuit was filed that the Illinois Credit Union League was a part of in conjunction with America's Credit Unions, the American Bankers Association, and the Illinois Bankers Association, all working together to challenge this new Illinois interchange law that came into effect. Well, it doesn't officially become a requirement until July of 2025, but it was passed and signed by the governor back in, I believe it was June, maybe early July. And I think if you listen, kind of read between the lines, it was pretty clear that there was something imminent that was about to happen in this space. And I'd kind of gotten that sense from my previous conversations with Tom and Ashley. But then, like I said, all was revealed very soon after. And we'll get back to a little bit of the follow-up on that right after we listen to my conversation with Tom Kane and Ashley Sharp. I'm here with Tom Kane, the president of the Illinois Credit Union League, as well as Ashley Sharp, the ICUL's senior vice president for state advocacy. I really appreciate you two joining me. This is a topic that I've been fascinated by around the interchange legislation that passed as part of the Illinois state budget this year. I found that there are two types of people in the industry. One that think this is a huge deal, and a surprising number that still don't really seem to know that much about it. So I really appreciate you taking the time to hopefully demystify it. So Tom and Ashley, thanks so much.
I'm glad to be here.
Thanks for having us, Glenn.
Let me start with some background. And Tom, just tell me if I've got this right, because this is kind of the way I heard about it originally. This is legislation that got tucked into the annual state budget process for the state of Illinois. And the issue, of course, is trying to, get a budget passed. It must pass. You can't finish the legislative session without doing it. And there was some stuff going into it around some tax credits that were being taken away from merchants. And in the late stages, very late stages, this kind of got surprisingly tucked into a budget process, even though this piece of interchange legislation has nothing to do with the budget. But basically, as I hear it, it was the state saying, listen, we know you're really mad about this other stuff we're doing. What can we do to make you happier? And the merchant said, well, there's this piece of legislation we've been trying to get done for a long time. How about this? And they said, fine, done. Nobody talked about it further. It didn't affect the budget numbers. It has a huge impact on a whole lot of processor, financial institution numbers. Am I fair? Is that basically what happened, Tom?
That's exactly right. It's an old-fashioned political horse trading that was really kicked off in February when the governor announced his budget. And in Illinois, like most places, requires a balanced budget. And he was also looking to increase spending in a number of areas. So he was looking at a number of revenue enhancements, including what you described as the sort of the reduction in tax credit that merchants could get for being tax collectors on behalf of the state. And so they were very upset about this and made it very known that they were opposing the governor's budget. And so didn't really hear much about it and didn't pay all that much attention to it because we didn't think it had anything to do with us. And literally it was in the last couple days of the session, and Ashley actually lived through this. She was the one who got the call from the governor's office to say that a deal had been done. And what they did was resurrect a bill from a couple of years ago, the Interchange Prohibition Act. So that was something that had been proposed a couple of years ago, didn't go anywhere at all. And so, it was sitting in a dusty pile somewhere, and they pulled that out, and that's how they got the deal done to be able to get the budget passed. And literally in the middle of the night, with some parliamentary maneuvers, they were able to get the budget passed. And all of a sudden, then we were facing this massive change to the payment system just here in Illinois.
So let's kind of from there, and as you pointed out, this has been on the wish list, and the merchants community has been shopping this around states for years, as you say. I know there's some things that we'll get back into this too, that it's kind of been positioned in other states. It's often been sent out to committee to actually research it. And when you research it, you discover a lot of the headaches that we're about to talk about. But the bottom line, as I understand it, and Ashley, again, please correct me, what the idea is, as Tom, you mentioned, the merchant serving as a tax collector. When you pay a bill by a debit or credit card, it includes the state taxes. And we're talking only the state taxes here, not the federal ones. So what they're doing is saying, okay, merchants, you will not be required to pay interchange on the state tax component of a credit card payment, or the gratuities. Again, based on the logic that should just be a pass through to the workers. On the foundation, I kind of get the logic, but as soon as you drill down even the slightest bit in terms of trying to turn this into something operational, it gets messy in a hurry. Ashley, can you kind of take it from there?
Absolutely, Glenn. It definitely does get messy. And, the argument from the retailers is that this is not their money. So kind of the middleman here in these situations where they're collecting gratuity that ends up going back to servers or taxes. And so it's not money they're retaining. And so they shouldn't pay interchange on the processing of that. From our perspective, I think we would say, regardless of whose money that is at the end of the day, there is still a cost associated with use of a complex payments ecosystem. And so, availing oneself of that system to allow for card acceptance comes at a cost. And so, there's a cost associated with doing so. And over time, through competition, that cost has been driven down. We don't believe the cost is exorbitant today, but it does come at a cost to utilize that access to the electronic system that is incredibly complex. And today, that system knows only one number. It only knows the total price of that transaction. It does not have to differentiate between what is part of the purchase that is subject to sales tax on the state or local level, or what gratuity amounts might be a part of that transaction. So the system reads one number, which is the total number, the total dollar amount that is going through the payment system electronically. And so when you introduce legislation to try to divide that out, the systems just can't account for that. I think something that is hard to understand is that while technology is fascinating and can do a lot of things, this is not just a flip of a switch to make this change. There is a lot of work operationally that would have to go into the back end of figuring out how to process these transactions with a portion of the transaction amount not being subject to interchange.
Well, let's dig into that a little bit, because I think that's part of the piece that, as soon as you peel back the onion, you get to this in a hurry. First off, I mean, like you say, and again, to be fair, this is not supposed to take effect till July of 2025. That's a whole lot of work that needs to be done in the next, 11 months, not only by the card networks and the processors, but actually by the merchants themselves. They've got to actually, in many cases, update their point of sale terminals, right?
Yeah, I would.
Absolutely.
Yeah, and one of the issues with that, particularly for the small ones, I mean, that could be a lot of money to outlay up front to put this whole thing in place. Point of sale system. I mean, the one thing is that people don't understand when they put that card into that little device at their local merchant, whether restaurant or dry cleaners, there's probably a dozen different hops at different places that transaction goes. It goes very, very quickly. But there's all sorts of different systems at every single stop that are going to end up having to be updated to figure out how this will work in Illinois. And as you described, it starts out with that point of sale system. So there's going to be a significant expenditure either for a hardware update or a software update that the small merchants are going to have to put in place in order to be able to make this happen. And they're not going to recover that probably for years.
The other piece that you just mentioned there, I think people have to remember, for Illinois, we're talking about something that's being done for only one of the 50 states. And we've already seen other states looking at this, and the rules that they've considered, as we always find with state level legislation rather than federal, they're not the same. So you do it in another state, they might treat it differently. I saw Pennsylvania looked at doing something like this, and they were not going to include gratuities. So you wind up with 50 different flavors cascading through that entire system. That's a mess.
Yeah, I think our senior senator, Senator Durbin, has commented after this was passed, and he, of course, has been pushing for different interchange sorts of legislation at the federal level. And this is one of those things that, of course, we don't want to see this being done at the federal level. We don't think it makes any sense to be done at the state level. We certainly don't think it makes any sense at the federal level. But this is something that is even more ridiculous when you think about, as you described, it could be different in every single state. And then how are you going to get all the thousands of different issuing banks and merchant banks and everybody in between to try to get their systems to work with this,
especially folks that in theory don't have anything to do with the state of Illinois. They might be sitting out in Montana, but still got to do it, because if someone decides to travel or do something online and use their card, it's still going to happen.
Yeah, and that's the crazy thing, is that it could end up hurting businesses, because it would here in Illinois from people outside of Illinois, because you're right, any sort of online purchases that are being done with an Illinois merchant are going to be subject to this. So it's not just people driving using a gas station in Illinois or a restaurant or anything. It's going to be anybody that uses an Illinois merchant.
Ashley, kind of following up on something that you mentioned too, I think it just kind of shows the fundamental misunderstanding. Right now, the system only sees a total transaction amount. It doesn't get the line item detail. This suddenly starts to then require that you're seeing specific information around individual line items, and not just like pre and post tax, because different things are taxed at different levels. There's different taxes for groceries, for fuel, for things like that. That starts opening up the door on data privacy too, doesn't it?
Absolutely, Glenn. That's something that we've raised as a point of concern, is that, consumer privacy is at risk with this, because today the payments ecosystem and all these players that we're talking about only know the total transaction price. That's all they need to know in order to process that transaction. They don't need to know the detail of what the consumer is actually purchasing. But if this goes into effect, the system will have to know what a consumer is purchasing, whether it's subject to tax, whether there's an amount of gratuity applicable to that transaction. So all of a sudden, all these players in the payments ecosystem will have to understand, they'll have to look into that consumer's purchase in a much deeper way than they've ever had to before. So yes, we do think consumer privacy is at risk here.
And then to take that another step, because I've heard this argument from another organization that I've been working with. Okay, so I think that part of the way of dealing with that is, and I think the legislature may have already talked about this, is okay. Well, we'll also just add a clause that says you can't use this information for anything else. Then you start actually potentially inhibiting some of the collaboration in the industry today that fights fraud. So if you suddenly lock down data privacy the wrong way, so to me, it's the issue of not letting the people who understand the process in the room when you're crafting the legislation. Doesn't this potentially also, impact some fraud fighting initiatives?
Yes, for sure. I mean, we've heard that from all of our credit union institutions that they utilize consumer spending habits in a manner that allows them to detect for fraud and prevent a lot of fraud transactions. And so now, with the language in the bill, they will not be able to utilize any of that information for anything other than processing the transaction. So there is a greater risk that the fraud detection scheme that works very well today is then at risk because of the prohibition on using the consumer's data.
So, I mean, I hate to call this good news, but I mean, we do have the opportunity to do something before this happens, takes effect in July of 2025. And I know that's where Ashley, you in particular, have really been on the ground working on this. What are the next steps? I mean, I'm sure that, once this was kind of brought in at the very last minute and became known at the end of the legislative session, I'm sure there's been tons of conversations. I understand you've been working kind of across different industry groups as well to try to get this message across.
That's right, Glenn. And at the direction of our members and the urging of everyone else in the payments ecosystem that is impacted by this, we have really been pursuing all options to fight back on this. We think this is bad policy. I know there have been some conversations about potentially trying to push the effective date back further to allow more time for implementation. But at the end of the day, we think what this is bad policy, and we think that's why it's been rejected about 50 times in similar proposals in about 30 other states. And so at the end of the day, it's still bad policy, and we are looking to fight that policy by any means accessible to us. We're looking at legislative remedies, litigation that would challenge the basis of this legislation on preemption. We have very robust laws in place to protect the nation's banking system. We think those need to be factored in as well as we move forward with potentially addressing this legislation.
I saw the first place I learned about this was through Crane Chicago Business, and I saw a few days after the news broke. You wrote a joint letter along with the head of the Illinois Bankers Association on this, and it always makes me. It reminds me of there's a lot more that unites than divides us on this. I mean, this is industry wide. I mean, this is not just the credit union space going after it, right? You're working across the boards with the bankers as well.
We're like I keep mentioning the complex payments ecosystem, and there are many players in that system, and they all are feeling the same way about this legislation being poor policy and having a negative impact on consumers, small businesses, financial institutions of all sizes. So, from our smallest to our largest credit unions, they are all concerned about this. Same on the banking side. It's impacting all of our institutions in a negative way. And at the end of the day, we believe it's going to impact small businesses and consumers in a negative way. There are going to be ramifications of this that trickle down. So again, we feel very comfortable collaborating, pushing back by all means available to us.
And yeah, you mentioned, kind of linking arms with banks and credit unions, and you also just mentioned all sizes too. And I know when some of these things come up, you wind up with the small institutions going, well, this is a 25 billion and up issue. It doesn't really matter to me. This one really affects everybody, right? I mean, if you got a card out there, it's going to affect you.
Yeah, and we we have a business corporation as part of our league. That's in our it's a QSO, and we deal with a lot of small credit unions across the country, and we have, of course, a lot here in Illinois that are card issuers. So really, this impacts anybody that issues either a debit card, credit card, or prepaid card. That they will have to abide by this. And as an issuer, that we've talked a lot about system changes that would have to be made. The other option in this whole thing is that a merchant does not have to do anything with their systems at all. They can just manually track all the different sales that they have over a 6-month period and then turn it over to their merchant bank. So whoever they do banking with, they can turn all those records over to the merchant bank, and the merchant bank then has 30 days to determine, the amount of money that they'll be paid back to cover the prohibition on interchange, which when we've talked to a couple of smaller credit unions about what this would take for them to figure out, how much they then owe all these different merchants that have been paid with cards, with their cards, it is just a massive manual mess. And so that's another aspect of all this beyond the systems part of it, is that a merchant could just, impose this very, very burdensome kind of process on it to be able to get their money back from having collected.
In an increasingly digital world, suddenly throwing a totally analog. I mean, tell me what I'm hearing here is a merchant basically printing out some report in reams of how many pages, sending it off to their bank and saying, "Here, you figure it out. You owe me some money."
Exactly. And 30 days they have to be able to do that. They have 6 months of collecting the data, and then it's 30 days that merchant bank then has to figure it all out, which is why you can imagine, the banks were very interested in joining up with us, in pushing back on this.
The other states, I know here in Georgia where I live, I know this came up during the legislative session, and what usually happens, I mentioned this, and this was before the Illinois one, the news popped. It was referred out to committee to do research with a panel of people, including experts from industry, that are going to look at it over the course of the next year and bring it back to the table in January. I know Pennsylvania actually got this relaunched based on kind of the merchants being energized by the Illinois efforts. And again, that's where I mentioned that, again, it was a slightly different flavor. So it would have been a totally separate exercise to program it. I think, Tom, you said that Tennessee had something going on here too?
Yeah, and it was another one where that's what, we had very, very little time to push back on this. Actually was able to testify, but by then it was pretty much a done deal. But one of the suggestions that we had was that they should do a stop and study, which is what Tennessee ended up doing, and we were using them as a model for this. Because as you described, if they actually did do that, we would have great confidence that they would figure out that this is, it's technically possible, but not within the time frame, and it'll cost way more money than what they'll ever save on this. So it just doesn't make any sense, and that's what we wanted them to do, but it was sort of a done deal by the time it came to us.
Now, I know this is a constantly moving story, and Ashley, you're the one on the front lines here. If people want to keep track of what's going on, what's kind of the best venue to kind of hear about the latest movement, and both in and outside of Illinois, to make your voice heard in terms of the issues?
Well, there's a website, guardyourcard.com, that has information about our perspective on this issue. It's also being covered by media outlets throughout Illinois and nationwide, because this is, such a hot topic, with Illinois being the first authorized legislation like this. So I do think there's good media coverage out there on this topic, where listeners can make themselves better aware of the complex arguments that we had a bit of time to touch on today.
Now that's guardyourcard.com. Is that the
yeah.
And for the actual credit unions and banks and people in the industry that want maybe something more than a consumer-facing, cardholder-facing type perspective that I assume that URL has, reach out to your leagues. Probably the best way to get more information.
Yeah, and I think and certainly the America's credit unions this has been a very big topic for them as well, because they are concerned, and as everybody in this payment industry is concerned about these things popping up in all the states. So I just came from a league president's meeting, and this is a very hot topic because everybody is seeing, there's a lot of people that are seeing, just this pop up in different forms. There isn't anything right now that's active. I mean, ours has gone into law, but there isn't a lot of legislation. Our sessions are in recess right now, but everybody is concerned that this is going to lead to, the next one and the next one and the next one.
And we've already seen the brush fires popping up already.
Yep, exactly.
Tom Kane, the president of the Illinois Credit Union League, and Ashley Sharp, the senior vice president for advocacy. Again, this is obviously a continuing story that we'll be hearing more about. Thanks so much for taking the time to get us up to date. So as I said, a lawsuit was filed just a couple hours later, and one of those things that proves there's more that unites than divides us. The America's Credit Unions, the American Bankers Association, the Illinois Credit Union League, the Illinois Bankers Association have all come together on this one. The Guard Your Card website that was mentioned, I want to point out, we've got a link to that in the show notes. When I looked at it, it more is dealing with, again, there's lots of issues around interchange. It more on the front page is dealing with the Durbin-Marshall Credit Card Competition Act that's been flying in the periphery now for some time and is kind of a little bit on hold, but we know it's going to pop up again. But then there's a drop-down menu for places where there are specific actions taking place on a state level. So the Illinois one is the most active, and you'll also find, as we talked about a bit, Pennsylvania has its own page on there as well. But as you'll find, the kind of the backstory around the suit, it's very clear that they're still looking to work behind the scenes in collaboration to try to come to some kind of resolution in a non-litigious fashion to make this happen. But at the same time, as they said, it's just too dangerous to assume that's going to happen, and they're protecting their rights by making sure that if that kind of solution does not work, that there are other ways to prevent this from going into effect next July. But as Tom Kane pointed out already, and also said in the press release, and we'll post a link to that one as well, the belief is that the law actually violates several federal statutes, including the National Bank Act. Tom points to the disruption that it's going to cause and the fact that it's never been tried anyplace else in the world. I don't know that for a fact. I'm going to take him for his word. I can't point to a place where people have tried to kind of disaggregate the systems that way to break apart the individual components of a credit card dollar value transaction, or debit card for that matter. But anyway, we'll be following the story. Thanks, as always, to our guest, but particularly this time in a very, very busy time. You can tell from her voice that Ashley's been working the circuit quite hard on this one in terms of working with lobbyists and state representatives and whatnot, trying to move this one forward. So I appreciate their time. With that, another episode of the Big Cast in the books. My name is Glenn Sarvati. You can track me down via my firm 154 Advisors. You'll find me on X. You'll find me on LinkedIn. You'll find our grand poobah, John Best, at JB FinTech. You'll find the Best Innovation Group at Big FinTech. And as I said earlier, big-fintech.com, and there on the media tab you can find past episodes or current episodes of the Big Cast, along with a drop down of show notes where you can find out more about some of the topics we've been talking about. If you pick us up via Apple Music, Apple Podcasts, Spotify, Amazon, etc., you should also be able to see those drop downs. One of the things I mentioned, I find this topic to be fascinating. I've also found it to be a weird kind of bifurcation of the marketplace. People who are really into this space, chief payment officers, people at the tops of credit unions, are very aware of it. Other people in the industry still don't necessarily know what's going on here and have not heard much about this interchange effort. So particularly as it has played out in the state of Illinois, which is the first time it's ever been pushed forward this far. I'd be curious to see yourself how much you knew about it before this, and if this has kind of changed any of your opinions. Always happy to hear comments from you via the Best Innovation Group website, via LinkedIn, however you want to get in touch. Hope you'll check in next week. We'll have new content again on Tuesday. And as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.